Hello and welcome to the stock market analysis. Today we're gonna have a look at this stock Lucid Group, ticker symbol LCID. It's popping up today and it's exciting. So without further ado, let's take a look at the stock right now. You can see that it's gapping up, okay, and stock is has broken above this downtrend line, or it's trying to break above. Now something good about this stock is that it has gone back above the 20 MA, the 50 MA, and breaking above this downtrend line, and maybe this could be a double bottom in a weekly chart. This is a daily chart. Now there are certain things that I don't quite like about this stock at this moment. From a technical point of view, this stock is still in a downtrend in a daily chart, and usually when the stock is in a downtrend, we call it a bear market in the stock. You don't want to be touching a stock when it's in a bear market because it just keeps moving down. If you thought that this stock it's buyable here at 675, well, just imagine what happened now. It's half the price of it. So lower highs, all the way lower highs, lower lows. This is a definition of a downtrend. If you don't know what a downtrend is, it's the stock moving from the upper left to the lower right, and that's not a good thing. And the declining 200 MA tells us that this stock is still in a very bearish mode, and that is something you don't want to touch. Now let's take a look at the weekly chart. You can see that it is still in the downtrend in the weekly chart. We have a bearish cross here, and since then the 50 MA and 20 MA has just been declining, and this kind of hinted of where the stock is likely to go, right? And this stock has moved from about $10 up to a 62, 63, that was the high here, 64.86 all-time high in just a matter of 2, 4, 6, 7 weeks. So 600%, though this was a momentum play, but then a very sharp sell-off down here, move back up and down again, forming a double bottom. Okay, those who have observed this in the past might have seen the weekly bottoming tail, weekly doji showing slowing bullish, bearish momentum, and the fact that it's making a weekly double bottom along with the weekly bottoming tail gives the trader a buy setup in the weekly chart. You could buy when it trades above the bottoming tail, put a stop loss and ride it higher. Although it could not reach the high, for all-time high of 64.86, it managed to make a high of 57.75. So to make things interesting, we can actually take the target here. Well, target 3670, stop 4.73, so risk reward of 7.76. not bad actually, if you have taken the trade where the bottoming, when it trades above the bottoming tail, put a stop loss below. So these are some lessons that you can learn by looking at past history of the chart. Remember, bottoming tail, double bottom. Now let me just remove this. That is a lesson from the past charts. Now at this moment, this stock is not doing very well. Even if you look at the monthly chart, it's still very obvious it's really declining. These are the kind of stocks that looks very cheap, but you may be buying a falling knife. Why do I say so? Because any stock you want to invest, you should at least see it going back above the 200 MA. Okay, you want the 200 MA to be broken above, and then it kind of moves sideways, and eventually you want to see the 200 MA slanting up, right? That will be safer for your investors. Now at this moment, the 50 MA is still declining, 200 MA is still declining. It can be a bit dangerous for you. Okay, so these are the stocks that I advise you not to touch unless it goes back above the 200 MA. So always watch the 200 MA, let it be your guide. Many traders and many institutional investors, they look at the 200 MA. and you would do well if you avoid stocks that are below the declining 200 MA, that are below their 200 MA, have nothing to do with them until it goes back above the 200 MA. So I do hope this analysis has been helpful to you. Just a simple analysis on Lucid Group. And if you find this analysis helpful, please like my video and subscribe to my channel for more analysis like this. I'll see you in the next one.